My name's Dave Dubeau, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content.
Hey gang, welcome back. Today my special guest zooming in from Austin, Texas, Pete Alford, who works with Waterloo Associates. And these guys are doing some pretty big things in the development and the build-to-rent space, as well as a number of other things. And Pete, great to have you. Welcome to the show.
Thanks, Dave. Pleasure to be here.
So give us the big picture overview of what Waterloo Associates is all about. What do you guys focus on as your primary activity and asset classes?
Sure. Thanks, Dave. We're focused. We're based here in Austin, Texas, and we're a private equity real estate firm. We're a small team, about 10 folks here, 10 here actually in 12 in Dallas. Yeah. And we focus on all verticals on real estate, Dave, but we've currently come up with in the past few years a unique strategy to take the risk out of what a lot of people know as land banking. And we can go into more detail there. But again, as I mentioned, we do a lot of things with build to rent, single family rentals. Several years ago in our first fund, our first closed end fund, our second closed end fund was 25% single family rental, BTR, and then 75% this unique strategy of structured land financing. We call structured land development, if you will. And this third fund we're talking about here today and giving you an overview on the structure is 100% focused on structured land financing. And what it essentially does, folks, is just alleviate the leverage, if you will, and makes home builders land light. It gives them more efficiency with their balance sheets. So they like that, and we can walk through that unique strategy. It's a current income paying strategy too, Dave. So that's what's unique in this asset class as well.
Okay, so let's zoom out. And let's dumb it down as much as humanly possible, sure. Pete, because I'm not that bright. Got to explain, how does this land banking strategy work? Like,
sure.
Really, in layman's terms, if you will.
Yeah. So historically, a lot of people say, "Oh, land banking, we do that," or a lot of people do that. And essentially, the old, which is you can do very well with land banking, is you buy the land, you get it entitled under your own, financing, if you will, and then you go to a home builder and hope that they will, say, "We're going to buy it from you," but they can easily walk. So you have that big risk. But at the same time, you can still do very well, and the IRRs, if you will, on that strategy, the historical land banking can do well. But we found over the last several years, with where interest rates were and where home builders were going to go with the shortfall in housing here in the United States, and I think in the same there in Canada, is that we wanted to create this strategy whereby home builders want to be land light. They love to go out and purchase land, and build their inventory, but the worst and toughest thing to do is the horizontal development. So we come in and do that for them. We're essentially their warehouse inventory, and they pay us an upfront deposit, and we can walk through this. They guarantee the takedown of the lots, and they pay us a monthly fee, and that's our income and what we distribute to the investors along with principal as the lots are sold.
Okay,
yeah.
So let's take a look at this.
Sure.
So you've got a big chunk of property that you want to sell to home builders, okay? And they're nervous about taking down a big chunk all at one time. So if I understood what you're saying there, Pete, you're saying you can sell it to them kind of on payment terms, and you guys do some of the initial development stuff for them as well. Is that, am I?
Yeah, you're there. You're kind of there, but let me back step and give you an example. So actually the home builders, Dave, are coming to us. So they're going to Farmer John, and let's say 2 or 3 years ago, they bought the land from Farmer John. They own it and they've got it entitled. Okay. So we're not going to engage with them. Correct. We're not going to engage with any of these deals unless the land's entitled.
You're not dealing with Farmer John.
Correct.
You're dealing with the guy that's already got the land, and they've gone through the rezoning or what have you.
Yeah. So let me give you an example. So, we have 5 or 6 going at once. We've got 2 or 3 in our current Fund 3 strategy now. Yeah. So the home builder, and these are large, ladies and gentlemen, these are large home builders. These aren't your mom and pop shops. There are over 400,000 home builders here in the U.S. We're working with the top 30 to 40. So Dave, what happens is that home builder A, these are multi-billion, $500 million shops. They never went under in the GFC. back in the 08-09 crisis. So they're very, very solid financially. So they come to us with fully entitled property and they say, okay, Waterloo, we like the way you're an operator as well as a structured finance group. So that's where we wear hats. We're very deep value, Dave, whereby we can operate and develop as well as structured finance and create these structures. So we really have protection here. So the home builder comes to us and says, okay, Waterloo, will you work with us to do the horizontal development because we want to get this off our balance sheet? We'll first, Dave, underwrite it. And so we'll do the deal. So if something goes wrong, we don't mind owning it. Okay, that's number one. So let's say that home builder has bought this land at cost for $10 million. And now it's fully entitled, so it's probably worth 20. And they've held it for a couple of years. And so they're ready to go with this, 400-acre community development.
Right.
And they come to us and we say, okay, we like it. We're going to work with you on this. So we'll say, okay, we're going to buy the land from you, home builder A, at cost. So we're going to buy it for $10 million with no lien. Okay. That's day one. At the same time, Dave, they're going to do three things. They're going to pay us an upfront deposit. They're going to guarantee the max price contract, and then they're going to pay us monthly fees. So let me just walk you through that. So we buy it for $10 million. Let's say that's $10 million. Then the horizontal development's another $40 million to get the final project cost, which is $50. Okay. So they're going to pay us usually 20% to get it off their balance sheets. That's the accounting terms, 20% of the total project cost. So 20% of 50 is 10 million. So we're now in it for zero. So that's number one. So we're in it for zero with no liens. Then the second part of that is they're going to then guarantee the contract. So in the future, they're going to guarantee the number of 40-foot lots, 60-foot lots, 70-foot lots, takedown in month 14, 16, 18, et cetera, at a set price. So we're not susceptible to any future pricing in housing, and we'll come back to that as needed. And then thirdly, as they're going to take that down with guarantees, no outs at all. They're also going to pay POA, insurance, everything. And then the final is they're going to pay us what we call an option fee, the monthly fee, anywhere between 12 to 15% unlevered, and that's our profit in the deal.
Wow.
Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com.
Yeah, so that is very unique. Did you guys kind of come up with this yourself?
Yeah, it's a great question. Mike Stewart, our managing partner, did that. There are a few other firms out there that are doing this, but they're more, more on maybe the debt side or their operator side. They're not both, and that's why we've been institutionally vetted. And institutions, a $2 trillion asset management firm, has come to us to work, directly on a JV basis, programmatically with us. But this is just such a unique, we call it an asset back. It truly is an asset back bond, Dave, whereby, we're owning the land and we're their warehouse inventory. And these home builders love to just come, and they're manufacturing firms. They're like Ford and GM. They want to come in, build their widgets, build, sell. So they want to have those finished lots ready. And we're going to do that with construction draws as they're coming to us. And we're going to have that monthly fee as the construction draws are being paid.
Very, very cool. So what percentage of your business is involved in that these days?
Right now, it's 100% involved. Yeah. So our fund one was 460 homes in BTR and SFR category. That was vintage 2017, 18. We're now down to the last 10 selling off that, which is nice. That was a $20 million fund. Fund two was a $50 million fund with 30 million recycled. So 80 million. That was, as I mentioned earlier, 25% SFR and then 75% this strategy. And then, Dave, by popular demand, we just said, let's go with 100% into this structure for Fund 3. So it's a $200 million raise, of which we have 75 million subscribed, another 25 committed with a nice anchor position in there. So we're just out, meeting institutions, family offices, other private equity firms that might find this of interest.
Very, very good. So obviously you're getting pretty good uptake on that. Are people confused by this new, because it is kind of new and sometimes people are nervous about being there, so.
Yeah, that's a great question. I wouldn't say people like it, but they have to truly understand. Now, let me just backtrack, say, why would a home builder do this? And what are the risks? And I think that's the bottom line. The home builders folks do this because they really want to be land light. There are 4 key elements that they really have in their business plan. Is one, they've got to buy land and future land for, the future 5-10 years out. So that's where they're using the hundreds of millions of dollars of debt facilities they want. They don't want it sitting around, doing the horizontal development, and we'll come back to that. The second one is the horizontal development. And most banks and lenders don't like that because you almost get 0% LTV, to do that. But they really want to have those capital lines to go out and build the widgets, build their sticks, build and sell. So that second tranche in there, the horizontal development, we're taking off their balance sheet. We're going to then be sort of the bank, the warehouse inventory, if you will, lender there. We're going to do the construction draws. We're going to oversee all the invoices that come out and then pay A360. Once those come in, those rates are being incurred monthly. And that's our income. So the investor experience is getting that current income, not right away because we're calling capital, Dave, but come month 10 or 12, it's just ongoing mailbox money for their investors. And that's what they like.
Yeah, no, that makes a ton of sense. Very, very cool. So how long do you think, if you could wave that realistic magic wand, it's going to take you to fill up Fund 3?
That's a great one. Well, I think the fund we're looking at, it really depends on some larger institutions. We're getting the word out, which is nice. And with the interest rates coming lower, and we're seeing if more, interest and cash is people are moving. I think what we're seeing a lot with other multifamily and other asset classes over the last several years, people have been sort of held up with, income coming back. So across the board, it's been tough with larger institutions, ourselves, just a challenge to raise equity. But we're going to get there. To answer your question, I think by the end of the first quarter of 2026 into the second quarter is where we'll close the fund out and hopefully be ready to move that forward. We've already made our first project and close in July, so that's already paying income. We'll have our first capital call here in October, and we'll look to have 3 to 4 quarterly capital calls for our fund.
Very cool. Very cool. Awesome. Well, this has been very interesting, Pete. Congratulations on this unique way of doing land banking that creates cash flow and provides value for your home builders at the same time. I'm sure there's going to be people wanting to connect with you or find out more about this. Where should they go?
No, they can come to our website, but I would urge you to just, email me or message me on LinkedIn, Pete Alford, and Dave will have that, I think, on the screen or on the link here as well, or just email me at petalford@waterloo-associates.com, and I think that will be available. And happy to assist and tell you more about what we're doing, but also learn more. And we've got a great network where we can help you, other investors or other people that want to know more about what we're doing. Awesome.
Pete, this has been a lot of fun. Thanks for being on the show.
Thanks, Dave. Appreciate it.
All right, everybody. Thanks for tuning in, and we will see you on the next one.
Hey there. I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.